Good day, theorists. It is October 9th, 2020. That's a Friday, and your final cherry bomb trade of the week is in. It is an iron condor, so some short premium in the Qs, the QQQs, which is an ETF that tracks the NASDAQ index, right? So if you're interested in putting on a pretty darn wide iron condor, maybe you like iron condors, they are one of the most popular strategies out there, as I understand. So you might like putting this in your trade portfolio today. So let's hop on into the platform and get ourselves introduced. Hi everybody, my name is Neil and this is Option Theory. Here we put together a portfolio of options trades, right, using ThinkOrSwim and its simulated trading platform. Some of us actually make real trades as well, but of course, that's all on you. That's what we're here to do, is learn and practice and hone our skills, right? So if you're new, head on down to that description and click the link to sign up for Tasty Trade's Cherry Bomb email blast. They will not spam you. There's multiple things that you can sign up for. At least sign up for the Cherry Bombs. That's what we do. You'll get 5 emails a week. One from the CEO himself, Tom Sosnoff, and then Tuesday through Friday, you get trades from Tom Preston. Good stuff. They'll give you additional information on things like background about the decisions, right? So the whole logic behind the trade, your theta decay, all that good stuff. So I do recommend that you do that. Now, this is normally where we move in and we build the trade, but I just want to give you a heads up at the end. If you can stick around to the end, I have something a little different that I want to try to introduce today. I know based on the statistics that I see in my videos that once you guys get to that screen where you see the strikes, you dip. I get that. Fine. Come get what you want. And that's fine, right? That's what the internet's great for. But if you could stick around in the end, I want to begin something new here with the channel. All right. So with that said, you should be able to see what's on my screen. I'm just going to verify real fast by mousing down over here. Yep, looks like you can see what's on my screen. Good. Cool. Now, we do have quite a few positions on right here, and I do have this IRA portfolio too, where I have this loser here. This guy was a winner and it turned a loser on me. However, this I guess is, well, this is a bonus. You didn't ask to have this. There we go. We're looking at, nope, silver. Silver is not a complete loss on this one, right? It was a short put vertical, but it didn't go through the long strike yet. So in this case, what we're looking for is for silver to bump up a little bit, and good news is, according to the futures, it looks like it's up over 2%. So there's a chance we might actually end up not taking a max loss, and I would love that. All right, so I know I still have to do that trade management video, but in a way here, I'm sort of adding that into these videos. But let's pop back over into the margin account and let's get to doing what you came here to do, right? So go over to the Analyze Trade, go to Add Simulated Trade. We don't want to be in silver, thank you very much. We want to be in QQQs. We're going to hit Enter, and here we are. So I'm going to close my options chains. We're going to be in the November 20th, November monthly expirations here, and these are the strikes that you were looking to see, right? We are going to be doing, and I like to look at the shorts, we're going to be short the 247 put. We're going to be short the 307 call. So that right there is your strangle, right? But as you may know, I'm not a big fan of strangles. And here's another reason why. I dip back into a history here. Here was a strangle that blew through my call side. So one of my worst trade yet has been a strangle. So not my favorites because of those call sides. Back over here. So the strangles, the 307, the 247, but of course, let's define our risk by buying protection $2 above our call to 309 and $2 below our short put at 245 for a $2 wide iron condor. Here we're collecting that tasty trade mechanic of 67 cents, which is about 1/3 the width of the strikes, right? So there is our trade. We have one contract built in there. You could, of course, increase the number of contracts if you'd like to increase your position size. Though, from what I understand in Tasty Trade's research, they have determined that it's better to go wider. So if you're looking to collect more of a credit, take more of a risk, right, have potential greater reward, you could widen your wings, right? So let's take a look at our probabilities at this point. So head on over to this risk profile. Make sure that your calendar is dialed into expiration here, 21, 20, pretty close. Right here it says the 21st, right? So I have got my price slices set to break even at expiration. So you see we're looking at a 63, let's call it a 64, because dang, that's close, right? 64% probability of ending up on these gold lines or in between them. And you can also see that the expected move in that time frame does extend beyond our call side, and it is not centered in this case, right? So we are getting a small amount of negative delta on this one here. So 0.95, negative 0.95 is our delta on this one. Very small, right? So look how wide that bad boy is, right? So let's take a quick look. Let's go back to the options chain. I had actually wanted to do that. Let's do this options chain. Let me bring this guy back down again. Pardon me, I have to sniff. And I'm back. Okay, cool. The 247, where are you? I want to take a look quickly at these deltas, right? So remember that this delta, by the way, the short one is 15 delta on the put side. On the call side, we're at 307, and that is a 19 delta. So you can see the difference there, but keep this in mind. This 19 delta, you want the probability of touch on this one, multiply that by 2, right? So we're looking at a 38% probability that QQQs in the next, 40-something days here, is going to, 42 days I think it is going to potentially touch this short call strike of 307. So, and then of course there's a 30% chance it touches our short put strike at 247. All right, back to this. Let's go ahead and actually set these slices to chart and get an idea of a visual of how wide we're going. I mean, that's pretty confidence inspiring. And the fact that we're short slightly, in negative deltas, and we're near the upper band here leads me to believe if this is going to be mean reverting, right? This is backwards looking. If it's going to be mean reverting, it'll head towards this turquoise line, and that will help us. That'll center us better. All right. All that analysis done. Let's actually consider throwing this trade on, right? So I'm going to bring this back up. I'm going to right click this. Let's check our max profit. Of course, our max profit is the credit that we would receive, but we would look to manage this when it's about 38.50, right? When it's worth 38.50, that'd be fantastic to take that off. Our max risk is the $2 wide minus this credit of 133. And would I look to manage this? I'm okay with taking this loss, right? Because I'm having a 74% chance, I think it is, that I'm going to be able to walk away with half this. I like that probability. 4% chance that I'm going to profit on this one. Yay. Okay. So we could potentially look to manage that. I do want to practice monitoring and managing these better. All right. So when I hit send, that's going to put it in my working order. And this is where I want to talk about that thing that I said, please hang on. So on Mondays, we get our emails from Tom Sosnoff himself. Love them. Always look forward to them. But we don't get a trade idea. And I've done a couple of trades of my own. But what I'm thinking I'd really like to do is I'd like to hear from some of my viewers. I'd like to hear from you. I'd like you to have an opportunity to suggest either an underlying, say, hey, I'd like to see a trade built in, Tesla. I'd like to see a trade built in Netflix or something along those lines. Give me an underlying that you'd be interested in seeing traded on a Monday. Or even better, if you have a trade idea that you'd like to see me do and me to offer my thoughts on and etc., you can give me your whole breakdown as to, what you'd like to see happen. What trade, what underlying you're picking, what strategy you're using, your rationale behind that. So that'd be fantastic. 2 ways to submit that to me. Down in the comments below in my videos, I am still a small channel, so I still get them, I still see them, I still look at all of them, I try to respond to all of them as well. So you could do that in the comments. If you'd like it to be private, you can head on over to optiontheory.com. There is I think it's optiontheory.com/contact. That should take you to a place where you can fill out an email form to me. I will not spam you. I'm not selling you anything. It's just love to hear from you. So I have had a longtime viewer, Mike Aruda. Thank you so much. He's been one of my longtime viewers and frequent commenters, and I offered him recently the opportunity to have first dibs on this one. So Mike, if you do submit to me in some way, either a comment or an email, I would like to use your trade idea or trade suggestion first. So I look forward to hearing from you all. And just because, if I don't choose yours, I mean, I don't know that I'm going to get flooded with a whole bunch of ideas. I don't get a ton of comments on my videos, but we're growing. I'd love to hear from you. All right. Now, this is where I also want to give you a thumbs up. You made it to the end. You actually stayed and listened to my new idea. Thank you so much. I hope you had a profitable week, and I look forward to doing a custom trade with you guys on Monday. All right, everybody. Until I see you, good luck today in your trading, in your trades, and I will see you on Monday. Happy trading.